Nike, the global sportswear giant, experienced a period of strategic setbacks from 2020 to 2022. These challenges tested the company's resilience and market dominance. Several factors contributed to this decline. The company faced internal issues and external pressures. Understanding these factors is crucial to understanding Nike's current situation. One key issue was an over-reliance on promotions. Nike heavily discounted products, especially in North America. This tactic, while boosting short-term sales, eroded brand value. Consumers began to perceive Nike as less exclusive. The constant sales also impacted profit margins. Another misstep was a narrow product focus. Nike leaned heavily on a few iconic franchises like Air Jordan and Air Max. While these remained popular, this strategy limited appeal. It also left Nike vulnerable to competition. New and existing competitors offered more diverse product lines, capturing segments Nike neglected. Market misalignment further compounded Nike's woes. The company failed to fully adapt to changing consumer preferences. Athleisure, a blend of athletic and casual wear, gained immense popularity. Nike's offerings in this category lagged behind competitors. This was particularly evident in key markets like China, where local brands capitalized on this trend. These strategic failures set the stage for the challenges Nike grapples with today. Over-reliance on promotions, product focus issues, and market misalignment created a perfect storm. Nike, once seemingly invincible, faced a critical juncture. The company needed to reassess its strategies and adapt to a rapidly changing landscape. Nike's overdependence on promotions had a detrimental effect on its brand image. The constant cycle of discounts and sales diminished the perceived value of its products. Consumers, accustomed to buying Nike at a markdown, became less willing to pay full price. This eroded the brand's aura of exclusivity and premium positioning. Furthermore, the focus on a limited number of product lines, while successful in the past, proved to be a double-edged sword. While iconic franchises like Air Jordan and Air Max continued to generate significant revenue, they also led to a lack of diversity in Nike's offerings. This over-reliance on a few key products made the company vulnerable to shifts in consumer preferences and increased competition. The strategy of focusing on a limited number of product lines, while initially successful, proved to be unsustainable in the long run. It created a sense of stagnation in Nike's product portfolio. Competitors, meanwhile, were quick to capitalize on this by introducing new and innovative products that catered to a wider range of consumer needs and preferences. This lack of product diversification also hindered Nike's ability to fully capitalize on emerging trends in the sportswear market. For instance, the rising popularity of athleisure, a blend of athletic and casual wear, caught Nike somewhat off guard. Competitors were quicker to adapt to this trend, offering a wider variety of athleisure products that resonated with consumers seeking stylish yet comfortable clothing options. Nike's struggles were further exacerbated by missteps in key markets, particularly China. The Chinese market, with its burgeoning middle class and growing interest in sports and fitness, presented a significant opportunity for Nike. However, the company failed to fully grasp the nuances of this market, leading to strategic errors. One critical error was a lack of understanding of local consumer preferences. While Western designs and marketing campaigns had worked well for Nike in many parts of the world, they proved less effective in China. Chinese consumers, particularly the younger generation, were drawn to brands that resonated with their cultural identity and aspirations. Additionally, Nike faced stiff competition from local Chinese sportswear brands. These brands, with their deep understanding of the local market and lower production costs, were able to offer products that appealed to Chinese consumers at more competitive prices. Nike's premium pricing strategy, which had worked well in Western markets, put it at a disadvantage in price-sensitive segments of the Chinese market. The combination of these factors led to a decline in Nike's market share in China. The company's image, once synonymous with aspiration and premium quality, took a hit. This served as a stark reminder of the importance of adapting to local market dynamics and understanding the evolving needs and desires of consumers in different parts of the world. As of May 2025, Nike finds itself at a crossroads, facing a multitude of challenges that demand immediate attention and strategic action. The company's financial performance has been lackluster, with declining sales and profits signaling a need for a course correction. One of the most pressing issues is the decline in digital sales. For 5 consecutive quarters, Nike has experienced a drop in online revenue, a trend that has alarmed investors and analysts alike. This decline is particularly concerning given the rapid growth of e-commerce and the increasing preference among consumers for online shopping. The decline in digital sales is not limited to a single region, but is a global phenomenon affecting Nike's performance in key markets such as North America, Europe, China, and the Asia-Pacific region. In North America, Nike's largest market, digital sales, have been particularly hard hit, with double-digit declines reported in recent quarters. This suggests that the company is facing headwinds, not only from external factors, but also from internal challenges related to its online strategy. Section 5. Declining digital sales, a cause for concern. The decline in Nike's digital sales is a multifaceted issue with several contributing factors. One key factor is the company's previous over-reliance on promotional activity. While discounts in sales can drive short-term revenue, they can also train consumers to expect lower prices, making it difficult to sell products at full price in the long run. This is particularly true in the online environment, where consumers have become adept at finding the best deals. Another factor is the rise of competition in the online sportswear market. Nike, once the undisputed leader, is now facing stiff competition from a growing number of online retailers, both established players and new entrants. These competitors are often more agile and digitally savvy, offering a wider selection of products, competitive prices, and a seamless online shopping experience. Furthermore, Nike's digital platform itself has been criticized for lacking the user-friendliness and personalization features offered by some of its competitors. Consumers today expect a seamless and personalized online shopping experience with features such as personalized recommendations, easy navigation, and secure payment options. Nike's failure to fully meet these expectations has likely contributed to its declining digital sales. The decline in digital sales represents a significant challenge for Nike, as e-commerce is expected to continue its rapid growth in the coming years. Addressing this issue will require a comprehensive overhaul of the company's online strategy. Section 6. Win Now, Nike's strategy for revival. In response to its recent setbacks, Nike has unveiled a new strategic plan dubbed Win Now, aimed at revitalizing the company and reclaiming its position as the global leader in sportswear. This plan, spearheaded by returning CEO Elliott Hill, focuses on several key initiatives designed to address the company's most pressing challenges and capitalize on emerging opportunities. One of the cornerstones of the Win Now strategy is a complete digital reset. Recognizing the importance of e-commerce in today's retail landscape, Nike plans to transform its digital platform into a full-price channel, reducing its reliance on discounts and promotions. This shift is intended to restore the premium image of the Nike brand and improve profit margins. Another key initiative is a renewed focus on key markets. Nike plans to prioritize its efforts in the United States, China, and the United Kingdom, with a particular emphasis on major cities. This targeted approach reflects the company's understanding that different markets require tailored strategies and that focusing on key regions will yield the greatest return on investment. Product diversification is another crucial aspect of the Win Now strategy. Recognizing the limitations of its previous reliance on a limited number of product lines, Nike plans to expand its offerings to cater to a wider range of consumer preferences. This includes introducing new product lines, expanding into new categories, and collaborating with athletes and designers to create innovative and stylish sportswear. Section 7. Early wins and lingering challenges. Since the implementation of the Win Now strategy, Nike has shown some early signs of progress. The decline in digital sales, while still present, has slowed in recent quarters, suggesting that the company's efforts to improve its online presence are beginning to yield results. Additionally, Nike has significantly reduced the number of promotional days, particularly in North America, signaling a commitment to restoring the premium perception of its brand. However, significant challenges remain. Nike's overall revenue and profits are still below pre-pandemic levels, and the company faces intense competition from both established rivals and emerging players in the sportswear market. The global economic outlook remains uncertain, with inflation and supply chain disruptions posing potential headwinds to growth. Moreover, Nike's efforts to reduce its reliance on discounts have been met with mixed reactions from consumers. While some appreciate the return to a more premium brand image, others have expressed frustration at the higher prices. Finding the right balance between maintaining brand equity and remaining competitive on price will be a delicate balancing act for Nike. The Win Now strategy is a step in the right direction, but it remains to be seen whether it will be enough to fully restore Nike to its former glory. Section 8. SWOT Analysis: Nike's Strengths and Weaknesses. To fully assess Nike's current position and future prospects, it's essential to conduct a SWOT analysis, identifying the company's strengths, weaknesses, opportunities, and threats. Strengths: brand recognition. Nike remains one of the most recognizable and valuable brands globally, synonymous with athletic performance and style. Innovation: Nike has a long history of product innovation, constantly pushing the boundaries of sportswear technology and design. Financial stability. Despite recent setbacks, Nike remains a financially sound company with a strong balance sheet. Weaknesses: supply chain vulnerabilities. Nike's reliance on global supply chains has exposed it to disruptions and increased costs. Dependence on US market. The majority of Nike's revenue still comes from the United States, making it vulnerable to economic downturns in that market. Over-reliance on wholesale. Nike's heavy dependence on wholesale partners gives it less control over pricing and brand presentation. Opportunities. Digital transformation. Enhancing its online presence and offering a seamless omni-channel experience can unlock significant growth potential. Emerging markets. Expanding into new markets, particularly in Asia and Africa, presents significant untapped opportunities. Sustainability: consumers are increasingly demanding sustainable products, presenting an opportunity for Nike to differentiate itself. Threats: intense competition. The sportswear market is highly competitive, with established rivals and new entrants constantly vying for market share. Geopolitical uncertainty, trade tensions, political instability, and economic fluctuations in key markets pose ongoing threats. Shifting consumer preferences. Consumer tastes are constantly evolving, requiring Nike to remain agile and adapt its offerings accordingly. Section 9. Charting the course. Recommendations for Nike. As Nike navigates the challenges and opportunities that lie ahead, it's crucial for the company to adopt a balanced approach that addresses both short-term imperatives and long-term goals. Here are some key recommendations for Nike. Prioritize digital transformation. Investing in a robust and user-friendly digital platform, offering personalized experiences and seamlessly integrating online and offline channels should be a top priority. Embrace innovation and diversification. Continuously innovating and expanding product offerings to cater to evolving consumer preferences, particularly in areas like athleisure and sustainable apparel, will be essential for long-term growth. Strengthen direct-to-consumer channels. Reducing reliance on wholesale partners by expanding direct-to-consumer sales online and through owned retail stores will give Nike greater control over its brand and pricing. Foster sustainability as a core value. Integrating sustainable practices throughout the supply chain using recycled materials and reducing environmental impact will resonate with environmentally conscious consumers and enhance its brand image. Navigate external challenges with agility. Staying ahead of geopolitical and economic uncertainties by diversifying sourcing, hedging against currency fluctuations, and adapting strategies to local market conditions will be crucial. By embracing these recommendations, Nike can position itself for sustained success in the ever-evolving sportswear market. The company must leverage its strengths, address its weaknesses, capitalize on opportunities, and mitigate threats to reclaim its position as the global leader in sportswear. The road ahead may be challenging, but with the right strategies in place, Nike can regain its footing and achieve long-term sustainable growth.